Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Wednesday. These are the stories that set your agenda. Congress blows past a midnight funding deadline, triggering the US government's first shutdown in nearly 7 years and the third under President Trump. Defending Europe, EU leaders hold talks in Copenhagen as they weigh mounting security threats and more support for Ukraine. Plus, Bloomberg's Women, Money and Power gets underway here in London, convening the most influential voices from across the global finance industry. We bring you the coverage throughout this morning. So, the US government shutting down for the first time since 2019. The question is, for how long will this continue, and what does it mean for data and economic releases now? Very uncertain that we get, of course, non-farm payrolls on Friday. We get ADPs, the private numbers later today. Will be added scrutiny, you would have thought, on that data point. European futures largely range-bound right now, seemingly looking for the next catalyst, the next detail in terms of how that story transpires. We have heard from the ECB's Christine Lagarde on the inflation story. Again, more data on inflation out of the Eurozone later today, which we will break for you this morning, of course. In the UK, FTSE 100 futures largely unchanged. S&P E-minis after some modest gains of around 0.3% by the close yesterday, currently down 0.4%. On the news, of course, out of Washington, D.C. Nasdaq 100 futures also lower right now by 126 points. Let's flip the board and have a look cross-asset. It's possible that the bond markets are more sensitive, of course, to this domestic political impasse in the US than the equity markets. 415 right now on the benchmark US 10-year. What does it mean in terms of expectations around the Fed? Larry Logan of the Dallas Fed suggesting that there should be caution in terms of the next steps. Any moves lower on rates, there should be caution there given the continuing inflation story. But in terms of the lack of clarity on data with this shutdown in the US, question marks again in terms of what it could all mean for the Fed. Job cuts as well possible. Euro at 117. The dollar softer for a fourth straight sessions. That's lifting the single currency by around 0.3%. Brent at $66 a barrel, and gold getting another lift, another record high for the yellow metal at 3,865, up 0.2%. So Congress blowing past that midnight funding deadline, triggering the US government's first shutdown in nearly 7 years, and it is the third under President Donald Trump. He has suggested his administration will use the shutdown to conduct mass layoffs of federal workers.
How many federal workers do you plan to lay off?
Well, we may do a lot, and that's only because of the Democrats. And as you know, they wanted to be able to take care of people that have come into our country illegally, and no system can handle that. And so we're totally opposed on that.
If you want an indication of how serious Republicans are about keeping the government open, who wants the shutdown? There's no better proof than the fact that Speaker Johnson sent everybody home this week, ensuring a shutdown no matter what the Senate did. So don't argue who wants the shutdown. It's Johnson.
OK, for more, I'm joined now by Bloomberg's Miles Miller. Miles, great to have you on set around the desk on this historic day, once again, for the US. Another shutdown, the third of President Trump, of course, for President Trump. What is the Miles, help us understand what the likely impact of this is going to be.
So the likely impact for global markets is that we won't get the crush of data that we get every month. We won't get the inflation data, GDP figures, nor the jobs report released on Friday, which will have really big implications for markets around the world as they seem to try to make decisions. That won't happen because the people who will be compiling that data, well, those folks are currently out of a job. 750,000 U.S. government workers without a job, and all of this because of a lack of passing what's really just an appropriations bill. Every year, there are 12 appropriations bills that are introduced in Congress. They have to be signed by the president, and we're here at October 1, the start of the fiscal year for the government. That bill wasn't signed by the president, and therefore, there's no money to run the government.
The last shutdown, 2018 to 2019, what was it, 5 weeks, the longest in history? Is that the guideline we should be thinking about in terms of the timing? And on the jobs piece, Trump has seemed to relish the prospect of cutting federal workers, which from the outside seems pretty remarkable. How likely is that?
Yeah, so let's start with how long this could last. We don't know. Right now, both sides are very far apart. As you heard Senator Schumer say there, the House already sent its members home, which meant that they couldn't even do anything if, say, this bill that was voted on overnight were to advance. So this shutdown was geared up and ready to happen. But yes, as you said, the president, President Trump, very much focused on these federal workers who may be permanently out of a job. This is sort of the first time we've seen this happen. He has a real budget hawk in Russ Vought, who has said that these furloughed employees may just never come back to their jobs. It follows in line with those DOGE cuts that we saw, the cuts spurred by Elon Musk. We know that this is the first time that this kind of thing has happened where, there's usually provisions for these people to get back pay and all of that kind of thing. It looks like in this instance that won't be happening.
And you touched on the data front, of course. We were all looking ahead to non-farm payrolls on Friday. Now it seems unlikely we will get that data. And when it comes to the BLS, so the Bureau of Labour Statistics, of course, and the person atop that bureau, given what has transpired in recent months and changes at the top, the White House pulling EJ Antoni out of leading the BLS. It was the contender. EJ was the contender. Why have they pulled EJ Antoni? What does it mean about who is likely then to lead the BLS?
If you can imagine it, in a very partisan Washington, EJ Antoni was just too partisan. From the Heritage Foundation, which has a lot of connections to the current Trump White House, and surely that he was just too partisan. And in addition to that they did not feel he would have smooth sailing on Capitol Hill. We knew that because they did not even take up his confirmation. It hadn't set a date for his confirmation. As you remember back in August, Erica McIntyre, she was fired by Trump, and he said because she was a Biden appointee, we'll see what happens with this. No new person named. They also didn't pull the recommendation for the person who was going to be leading the Commodities Future Trading Commission as well. So what we know is that it's partisanship. That's really the crux of everything that's happening in Washington right now with a government shutdown.
OK, Miles, fantastic to have you on set to break this story down for us and give us the context and the details. Miles Miller, of course, on that government shutdown and the potential changes, or at least the continuing search for the new head of the BLS, the Bureau of Labour Statistics, in the US. Let's take a closer look now at how the markets are reacting then to the government shutdown in the US and bring in Bloomberg Markets Live strategist Mark Cranfield. Mark, what are you and the team looking at in terms of the assets most sensitive to what is happening right now in Washington?
Oh, well, one of those that you just flashed up just before you started speaking to our previous guest there. The euro is starting to pick up, as you can see there, a bit of strength. And that's really started since the headlines broke that the shutdown has actually started. And it's no surprise, really. I mean, that's exactly where traders, macro traders especially, the cleanest expression for them of what they feel about the US shutdown would be to sell the US dollar against other major currencies. And of course, the euro is the second biggest currency in the pot. So you would think that there'd be more traction for the euro on the upside. Japanese yen, Swiss franc will be other currencies that will probably be in that stream as well. And the longer the shutdown goes on, the more likely that money will shift away from the US dollar into those currencies. Because the flip side is that people also will be looking for a haven. The US Treasuries, to some extent, represent that haven, but also the fact that the implications for a weaker economy obviously put even more pressure on the Federal Reserve to lower interest rates this year and into next year, and that will bring yields down, and of course that feeds into the US dollar as well. So you've almost got a vicious cycle where the longer it goes on, the more yields will go down, the more the US dollar will go down. Equities is a little bit more nuanced. In the short term, they can probably withstand it. People will be looking ahead to the quarterly earnings season, which isn't very far away. Could be a pretty good season. Once again, people like Nvidia will be right up there, people expecting good results from them. But if it goes on for too long, if we get a repeat of the 35 days that we had last time under President Trump, by then the equity market will probably be starting to show cracks. If it's a short-lived one, they can probably get through it. But in the meantime, macro traders very focused on the dollar and treasuries.
OK, and the cleanest play is via the euro, and it's the timing around this, of course, that, as you say, is key in terms of how this is prolonged for or how long this goes on for. Mark, so you touched on the Fed there. So it's your expectation that ultimately this will feed into expectations that the Fed will cut further and faster?
Everybody's going to be looking for alternative data. If we don't get the non-farm payrolls report this Friday, which now looks a certainty that we won't be getting that, people will be looking around. And there is plenty of alternatives. Bloomberg Terminal now has a whole list of other ways you can read the data without having the official data on your hands. And it's in the short term, if President Trump is true to his word and he fires a lot of workers, obviously the impact is going to be pretty severe. People will see that and they'll have to respond. There's a lot of back and forth between analysts and traders about what is real, what is not real. But if you get headlines dropping where 750,000 people have just been laid off from their work, obviously that has an impact on spending. It's a very upfront thing for people to digest. It looks like a bad economic impact. It's very hard to get around it. That will put pressure on the Fed. Fed speakers will have to take that into account when they're speaking. They may think they can delay interest rate cuts. But if you have a Fed meeting coming up later in October and the only data you have to hand is some of the alternative data, and it's not going to be pretty, it's going to paint a fairly ugly picture of the US economy, they will be under pressure to respond to that. It wouldn't be surprising if once again they have to discuss a larger interest rate cut at their next meeting.
Oh, there we go. Maybe 50 basis points is back in terms of a discussion point, and certainly there will be at least one member of the FMC who'll be keen for that. Mark Cranfield, fantastic. Thank you very much indeed for the market reaction and what to watch for across the asset classes around this government shutdown. From our MLive team, of course, Mark, thank you. Now to what's happening in Europe today, away from the politics of the US. European leaders are meeting in Copenhagen to discuss the future of defence in the wake of Russian incursions into NATO airspace. They're also discussing continued support for Ukraine. Let's bring in our chief Europe correspondent, Oliver Crook, who's on the ground for us. Ollie, what do we know then about the latest plans to provide, 140 billion euros in loans to Ukraine? How real is that prospect? When does that money get to Kyiv?
So, Tom, that prospect is much more real today than it has ever been at any point. And this is basically back down to that conversation that has been going on for a number of years around these Russian assets that have been immobilized in Belgium and basically what to do with them. As you'll remember, the big debate and what they basically came up with at the G7 was to monetize the proceeds, i.e. the interest and all the sort of money that those investments were making in order to pay that directly to Ukraine. What we are talking about now, very, very openly among European leaders, is basically trying to find a way to monetize the underlying assets. So that means about 150 billion euros, 140 billion euros worth of assets to basically fund not the Ukrainian budget, but to fund the Ukrainian military basically against Russia. So trying to take Russia's money to fund the military effort to repel Russia from the Ukrainians. And you'll remember, Tom, that this was basically seen as a non-starter for many European leaders, including the Germans a few years ago. And we had Friedrich Merz, the Chancellor of Germany, last week writing an opinion piece in the Financial Times saying that basically it is now time for us to take this seriously. So what this will amount to is a debate today among European leaders. They will not make the decision about it today. This will be basically the preparation. They will hopefully move on this at the end of the month at the next EU leaders meeting, is to basically figure out the mechanics of how to do this, because it's very important for the Europeans to basically not be effectively stealing the Russian assets, but finding a way to basically put a loan up forward, use those Russian assets as collateral. And there are a lot of very difficult questions basically about who backs that loan, what countries are basically on the hook if, let's say, theoretically the war were to end and Russia were to retake possession of those assets, who's on the hook for the money? Also, are there going to be certain strings attached? If you give a loan of 140 billion euros to the Ukrainians, do they need, for example, to buy with that money only European military hardware? These are some of the prospects that Friedrich Merz basically floated. And we should say there's a distinction between what Ursula von der Leyen wants and what Friedrich Merz wants. Friedrich Merz wants this loan to be backed by the member states initially, and then eventually for the EU actually to back it. So these are some of the details that will be discussed today among the leaders. But we should say, Tom, this obviously would be massive. In order to get 140 billion euros worth of funding to the Ukrainian military, it will give the Ukrainians a massive amount of staying power against Russia, and really, in Friedrich Merz's mind, try to bring the Russians to the negotiating table if they basically know that the Ukrainians' military is funded for the years to come.
Oliver Crook, thank you very much indeed on the progress being made potentially around that additional funding, of course, for Ukraine on the ground for us. We'll get more from Ollie throughout the morning, of course. Coming up, we're going to look ahead as well to euro area inflation data later. We're going to get a view from Swiss Re's Charlotte Mueller. We're also going to get her view as well in terms of the shutdown in the US and what it's likely to mean for the Fed and the path ahead for the US central bank. Plus, stay with Bloomberg Television for live coverage of Women, Money and Power. That event taking place here in London, convening the most influential female voices in finance from around the world to discuss consequential themes facing the future of business. Highlights include Franklin Templeton's Jenny Johnson, Straight Street's Yesin Huang, First Round's Mary Velakadze and GSK's Emma Walmsley. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. US stock futures lower this morning as the US government begins its first shutdown in nearly 7 years. Joining me now is Charlotte Mueller, European chief economist at Swiss Re. And Charlotte, we'll get your views in terms of the inflation direction in Europe, of course, what it means for the ECB, maybe your views on the SNB as well. But I want to start with what's happening in the US. So the government shut down there. What do you think the economic impact is going to be, Charlotte?
Good morning. So in terms of the economic impact, if you think more bigger picture, we wouldn't say it changes our baseline views. If you still look at underlying growth for the US, we have around 2% for this year. Of course, a lot depends on the duration of the shutdown, but a lot of the growth that is lost during the shutdown will also be recouped later on. So it doesn't really change our growth forecasts.
Does it change your forecasts around the Federal Reserve?
So with regards to the Federal Reserve, we would say that we do not expect a rate cut later this month. So contrary to the previous speaker, key reason for that is also with now non-farm payrolls not coming out this week, which is a key indicator for the Fed. We think they're rather going to play it a bit more patient, stay on hold, and rather cut next in the subsequent meeting afterwards. I think the key message with the Fed is they're still going to be cutting, but not for this month.
OK, they don't cut in October, and part of that is down to the lack of clarity on the jobs picture. Charlotte, you mentioned that you recently upgraded your forecasts around both the US growth picture and Eurozone growth picture. On a day where we're seeing more tariffs implemented, what does that tell us about the relative resilience of these economies to those trade tensions?
Yeah, so a lot of the upgrades that we're doing for this year are more backward-looking, thanks to a stronger first half of the year, with much more also, say, stronger front-loading when you look at Europe. With regards to the resilience overall for the economy, I think in the US, we do see a slowdown in the labor market, but we're not expecting a significant slowdown either. When it comes to Europe, if we look more into the forecast for next year and beyond, it's also going to be benefiting a lot from all the fiscal spending that will help to cushion the negative impacts from the trade tensions.
And Charlotte, when it comes to the question of inflation, of course, we can't talk about inflation without thinking about the impact of tariffs. We've been hearing from the ECB's Christine Lagarde saying that there are no serious risks to the inflation metrics of the Eurozone right now. Of course, they stay vigilant, but no serious challenges with the ECB down to around 2%, of course, in terms of the base rate. Charlotte, what is your expectation for how the inflation story in Europe evolves into next year?
Yeah, so I would agree that in the near term, there is no concern. And actually, we would say that we are going to see a rise in CPI inflation in the Eurozone later today, following the stronger prints also that came out in key regions or key countries earlier this week. But this is a more one-off effect driven by energy base effects. But if you look into next year, we do see inflation undershooting the ECB target. So we have a forecast of 1.8% on average for next year. And that will even be undershooting even further down, especially in the Q1 of next year. However, what I think is maybe the underappreciated risk, so most consensus views say the ECB now is done with rate cuts for the rest of also next year. But maybe the underappreciated risk is that longer term inflation pressures will build again in, say, 27, 28. And that's what's key for the ECB forecast horizon. And there, maybe they could even potentially, risks are skewed that they could hike at the end of 2026 if they start to look at the more medium-term forecast horizon due to also inflation pressures from fiscal policy.
OK, so 1.8% on inflation in 2026, but the risks of an ECB hike at the end of the year when that story starts to evolve in a different direction. Charlotte, I want to get your views briefly on the SNB before we let you go, the Swiss National Bank, because we've had this statement with the US Treasury and the SNB pledging not to manipulate the franc, the Swissy exchange rate, to earn an economic advantage. Is that going to limit the SNB's ability to intervene around the currency?
It could. The other option that they can use is also interest rates. What we would say is we expect them to still be largely on hold, though, for this year and also into next year. Also with inflation likely to eventually start to also tick up in the more medium-term horizon. Still very low, like we have only around 0.3% for CPI next year. But remember, they have a much lower inflation target than the ECB or the Fed.
OK, and in terms of the SNB's chief saying that relatively relaxed about the tariff impact, saying only about 4% of exports are actually impacted. Do you share that view from the head of the SNB that actually the tariff impact is relatively minimal?
So we would disagree. I mean, there is certainly a negative impact, but we just haven't seen all the impacts. So most of the impacts will be coming now in the second half of this year and into next year. That said, also with the latest headlines, say, on pharmaceutical tariffs, a lot of the key Swiss pharmaceutical companies, they already have production in the US. So as a result, they will not be as impacted by these tariffs, or not at all, actually. So I think a lot of the headlines might sound negative, but then in practice, maybe the tariff impact still won't be as large. But overall, still, I think there is an impact on Switzerland.
Charlotte Mueller, European Chief Economist at Swiss Re. Thank you very much indeed. Coming up, we're going to continue our coverage of the first US shutdown in nearly 7 years. We'll bring you the latest. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news today. The Fed has lowered Morgan Stanley's capital buffer requirement to 4.3%, down from an initial 5.1%. Back in August, the Wall Street lender had asked the central bank to reconsider its requirement under the annual stress test exercise. A total of 22 banks comfortably passed this year's test that determined they would be able to withstand more than $550 billion in losses. President Trump says his administration is close to finalising a deal with Harvard University. An agreement would potentially diffuse one of the highest profile fights between his administration and US higher education. Trump initially accused Harvard of failing to tackle anti-Semitism on campus, but later broadened that to include allegations of political bias. And President Trump has told top military leaders that the US is fighting what he calls a, quote, invasion from within. At a rare gathering of officers stationed around the world, Trump delivered a largely political speech emphasising border security and the need to root out so-called woke culture. Coming up, the US government begins its first shutdown in nearly 7 years. We'll bring you the latest. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Congress blows past a midnight funding deadline, triggering the US government's first shutdown in nearly 7 years and the third under President Trump. Defending Europe, EU leaders hold talks in Copenhagen as they weigh mounting security threats and more support for Ukraine. Plus, Bloomberg's Women, Money and Power gets underway here in London, convening the most influential voices from across the global finance industry. We bring you, of course, coverage throughout the morning. Let's turn to the markets right now and see how the equity markets are digesting the news of this shutdown in the US. The question marks, of course, in terms of how prolonged that will be, the impact on the data front as well, with non-farm payrolls expected on Friday. Now, big question marks as to whether or not we in fact get that data. European futures a little softer then by 0.1%. FTSE 100 futures here in the UK just down 4 points right now. S&P futures, after getting around 0.3 by the end of the close today, now down 0.5%. Nasdaq 100 futures off by 142 points. Let's flip the board and have a look cross-asset. We've been hearing from some Fed speakers as well. The Dallas Fed President, Lori Logan, suggesting that there should be caution when thinking about the next steps for the Federal Reserve. 4.14 right now in the US benchmark 10-year. Treasuries largely unchanged. There's a bit more movement, though, in the FX markets, with the dollar down for the fourth straight day. That's lifting the euro, the single currency, at 117, up 0.2%. Brent at $66 a barrel, currently up 0.3%. And gold, another record high for the yellow metal at 3,865, getting a bid on the back of the political uncertainty, of course, in the US, up 0.2%. So let's get more details on that. The US government then beginning a shutdown affecting hundreds of thousands of government employees. Bloomberg's Miles Mueller joins us for the latest. Miles, what is the expected impact then as a result of this shutdown that we're now in?
Right, and we know that the Federal Reserve will not have those key indicators that really allow it to set policy. We're talking about the jobs report Friday. We're talking about GDP figures and inflation, all expected to be delayed significantly because of this government shutdown. 750,000 U.S. government employees without jobs overnight in the United States because of what happened here. And the shutdown really came down to concessions over health care and concessions over Medicare. What will happen? Democrats and Republicans have to come together. And as of right now, there's no plan for them to do that. This shutdown, we have no idea how long it will last. You take a look at the quick take on the Bloomberg terminal, 35 days, 2018. That is second to 1995 during Bill Clinton's presidency, 21 days, and then in Obama's presidency, one that lasted 16 days. We have no idea how long this is going to last.
And that's crucial, isn't it? The uncertainty in terms of how long this continues. With $11 billion was the economic hit back in 2018, 2019. They recouped most of that, the US economy. There was $3 billion that, on some analysis, was not recouped. So there is that economic impact as well. Again, dependent on how long this continues. Bloomberg's Miles Mueller with the context and the details. Thank you, Miles, for that update. Meanwhile, here in the UK, Prime Minister Keir Starmer has used a rhetoric-heavy, policy-light speech to the Labour Party conference to appeal to working-class Britons to stick with his party. Keir Starmer attempted to embrace progressive patriotism and questioned the allegiances of Nigel Farage's poll-leading Reform UK party.
Because growth is the pound in your pocket. It is more money for trips, meals out, the little things that bring joy to our lives, the peace of mind that comes from economic security. But it is also the antidote to division. That's the most important aspect of national renewal. The way you grow an economy, not just how much, but who and where benefits.
OK, so the UK Prime Minister with his pitch then to the Labour Party conference, of course, yesterday. Here in the UK, meanwhile, the focus on technology, of course, and there has been some success on that front in terms of fund flows, the commitments coming through from the likes of Nvidia, President Trump's visit leading to a lot of investment in UK tech. Concept Ventures, Europe's largest dedicated pre-seed fund, meanwhile, pre-seed fund, has raised $88 million for its second fund. The money will be used to back early-stage outsider talent, as they characterise it, building on its success as the first institutional investor in the voice AI company 11 Labs, so it's really at the forefront in terms of audio AI. Joining me now is Reece Chowdhry, Concept Ventures founding partner. You've also backed Monzo as well in the fintech space. Reece, thanks for coming to the studio. So it's a big raise, particularly when we think about pre-seed capital. What does it tell us about the money, about the fundraising environment right now?
I think, thanks for having me, Tom. Really appreciate it. I think the fundraising environment for Europe is never been stronger than in my whole career. I think we've had, the first wave of the Spotifys, the Revoluts, and now these founders are teaching the founders that are coming through the 11 labs, you know, the Waves, the Synthesias, etc., the way to go. I think, you know, even we recently saw Klarna's IPO, and Matti, the founder of 11 Labs, is on the board of Klarna, and I think that's so important to get that ambition level to the next level. I think Europe is such a great place to start a company. The talent is incredible in Europe, particularly in the UK. And I noticed you had Matt on a couple of days ago, and he was saying same thing. I would really echo the points that he was making, that London and the UK is definitely one of the best places in the world to build a tech company.
And what does it tell us? That of that $88 million that you've raised, a significant proportion comes from US investors?
I think that's a really important point for us, particularly. I think the US has always been the place to go for many of our companies. If you look at the downstream markets and the IPO markets, typically in technology, there's always a US investor at the end of that journey. But typically at the very start, where we invest at the pre-seed stage, often people won't take a bet from the US, and that's why those US investors have invested in us, because we're being on the ground, making that bet on just people alone is where we specialize. And you know, I think that's difficult when you're often sitting in the US.
So where is we talked about the success you've had with 11 Labs, now valued at north of $6 billion US. Reece, as you look at the next 12 to 24 months, you've got out $88 million that you're going to be deploying. Where are you seeing opportunities?
I think, I think the main thing we're seeing is a complete broader spectrum sectors where we specialize in people. You don't know where the next technology boom is going to come from. And when we invest in 11 Labs, it was a non-obvious bet. In the UK, Matti went to a podcast recently and said 30 investors passed, and this has become a $6.6 billion company. And I think generally we're very sector agnostic and people focused, and we really think the next technology investors, founders, will be built from various different sectors. It could be robotics, it could be in AI, it could be in marketplaces. We don't know. We're very focused on the people. Our methodology is to go very deeper than anyone, and make that bet before others. We lead 90% of our rounds. And so we don't have any kind of FOMO of what other people are doing. We're very focused on just those people and underwriting them.
And most of your team do not have traditional venture capital backgrounds. Why do you think that gives you an edge?
I think it's a huge edge. I mean, we have a complete beginner's mind. The team is absolutely incredible. They've all networked in VC before. And I think when you come from that background of not having a way of investing, typically, you focus on something completely different and say, what does actually people need at this earlier stage? What are we looking for? You know, we don't focus on markets, we don't focus on products, and just giving that laser focus on the people itself is something that we all are obsessed with, and we've built very deep models, our own insights, and various things.
I want to ask, this is a key question that many, of course, in the space, within tech and beyond, are asking, which is whether or not we are facing an AI bubble kind of environment. Does that concern you?
It is a concern. We're very much at the early stage, and I think in maturity of life cycles of companies, the good companies do win out. Fundamentals do come back eventually. I think there's obviously some froth in the market, and a lot of investors are worried about that, but I think fundamentals return in the long run, and we've seen that in the public markets. We see that eventually in the late stage markets. We saw that in 2021, 22. The markets have corrected from those technology bubble eras. So I think if you stick to fundamentals as founders in the long run and build long enduring companies, there's huge value, and this AI wave will show that in the next 10 years. I'm 100% sure of that.
11 Labs, you talked about the valuation, $6.6 billion, and so they recently allowed many of their employees and early investors to cash out. Did you cash out? Do you still hold 11 Labs?
We are big investors still in 11 Labs. I think the company is one of the best growing companies in Europe, if not the world, and I think the founders have made some of the numbers public of how fast they're growing, and we're very long-term holders of the stock, and we really believe that company could be one of the greatest companies to come out of Europe in the next 5 years.
How do you think they exit? Do you think they IPO, capital markets? Do you think an IPO is on the cards for 11 Labs?
I think there's obviously lots of options with a company like that, but I would defer to the management team on what they think. But I think they made it public that one day they might want to go down that path. But look, I think a great company at this stage, it's only 3 years into the company life cycle. Management would have lots of options, I'm sure. So.
And you're focused on UK and Europe. Where are you finding most opportunities right now across those regions? Are there certain countries that stand out to you?
I think obviously the UK is a standout for us. Traditionally, we've been very bullish on the UK, and particularly in London. And
you still are. You're finding the talent that you need.
Yeah, absolutely. I would say currently currently the pipeline we have, around 70% will be in the UK and London. Historically, if you look at the unicorn rate in Europe, the big proportion are based in London. We have incredible AI talent. We have incredible ecosystem of downstream investors and people that are coming and repeating. And this is, I think, the key thing. We're having this next generation of entrepreneurs. Around 50% of the investments we make are into second-time founders. They might not build a unicorn before, but they might have had smaller exits. And I think that's what you're really seeing in the UK and European ecosystem. It's that repeat nature of ambition.
That scar tissue that those founders have.
Yeah, exactly. The scar tissue is super important.
Reece, fantastic to get you in the studio. Thank you very much.
Really
Congratulations on the raise.
Thank you.
We'll be watching, of course, in terms of how you deploy that capital. Backers, of course, of 11 Labs, Monzo, amongst many others. Reece Chowdhry, Concept Ventures founding partner on that $88 million pre-seed raise and fund. Coming up, is the boom in private markets here to stay? We're going to explore that question, much more, as we look ahead to the second edition of Bloomberg's Women, Money and Power event. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, efforts are underway to reinvigorate the London Stock Exchange. Once a go-to destination, of course, for companies seeking to raise capital. But with record levels of private money flooding the market, more and more firms are opting to stay away from public listings. That is one of the key issues being explored at Bloomberg's Women, Money and Power event, now in its second year. It brings together some of the most influential female voices from across the global finance industry. Joining us now is opening trade anchor Kriti Gupta with a preview as to what to expect. So what are some of the key things? That's one of the key themes. What else is going to be discussed? What else is going to be top of mind at the event?
Well, you know me. I'm all about the private markets. I feel like that's where all the action is lately, especially in Europe. And I think what's really fascinating here about this event is that we get the privilege of shipping in the top women from around the world, from over in Asia, from people hot-footing it in from the States as well. And that's kind of the theme that you're seeing in Europe, the attraction of international investment. We're going to be talking to the women, and I should say the power players that are driving some of that investment theme. It was a conversation last week at EPEM in Paris. We're going to continue the conversation here because at the end of the day, we know that Europe has a major funding gap in their infrastructure when it comes to their capital markets. You just talked about the LSE. We should talk about the fact that private capital from around the world is what's driving a lot of that reinvestment when it comes to transforming a lot of the projects that Mario Draghi has been talking about for quite some time, whether it's in France, whether it's in Germany, or whether it's right here in the UK. And a lot of that capital, again, is coming from abroad. So that's going to be a key piece of this, in addition to the fact that in the private markets, when you have access to these kind of funds, one of the key themes in the last 3 years has been the lack of exits, the lack of IPOs, the lack of ultimately even buyouts, for example, which we saw in yesterday's news flow in terms of the EA $55 billion LBO. So lots going on there. Does London play as an exit plan? And if we're seeing them kind of drop from the IPO space, I think yesterday there was a lovely story that said London has dropped below Mexico and Singapore.
Was that a lovely story, Kriti?
It was lovely reporting from us. But they made the point that, you know, London's IPO climate isn't as hot. Maybe the conversation here is how we make it get it back to that point. Or is it simply that public markets aren't the place to be in Europe, but the private markets very much are?
It's a crucial conversation. So here's an opportunity to name drop then some of the people who are going to be part of this event. Walk us through some of the key names we can expect to hear from discussing those kind of topics.
Yeah, absolutely. We've got the creme de la creme. So I'm going to start with maybe some of the local names specifically. We have Catherine Mann, who's going to be joining us in the next hour as well. So she, of course, is a BOE MPC member. The activist, the hawk, if you will, perhaps a hawk turned dove, if you will. So we're going to have a fabulous conversation with her on the show. And then, of course, she'll be featuring on stage as well. You mentioned the London Stock Exchange. We've got the CEO, Julia Hoggett, will be joining the event. So we'll talk, maybe put that question to her. How do you get London IPOs to, you know, be the next hot thing? So that's going to be something we talk about as well. We've got plenty of CEOs as well. GSK's Emma Walmsley will be on stage. We know that in the last, I want to say 48 hours or so, there's a leadership change at GSK.
Fascinating.
We're going to talk about kind of what her vision is perhaps for her last few months in the role. and what the future of the industry and the future of the firm looks like come January 1st. And that's just the surface of it. We've got so many public and private players that are joining both, again, the program, but then also the panels throughout the day.
Fantastic setup. Opening trade anchor Kriti Gupta, thank you very much indeed. And stay with, of course, Bloomberg Television for live coverage of the Women, Money and Power event here in London, convening the most influential female voices. You heard the names of some of them there, of course, in finance from around the world to discuss those consequential themes that Kriti just outlined for you, facing, of course, the future of business. Now to some other stories making the news this Wednesday. I'm getting ahead of myself. Mexican billionaire David Martinez has voted against the decision by Banco Sabadell's board to reject BBVA's 17 billion euro takeover bid. According to a statement, Martinez, who is a board member and top investor in Sabadell, agreed to take BBVA's offer for his stake of just under 4%. He said he disagreed with the board's rationale for rejecting the offer even after BBVA raised its price, saying a merger would spark a stock rally. Pfizer has agreed to reduce the prices of some of its drugs in the US by up to 85% under a deal to win a 3-year exemption from pharmaceutical tariffs. The company says it will ensure Americans receive prices comparable to those offered in other countries. The move addresses President Trump's complaint that the US unfairly shoulders the highest medical costs in the world. And Nike shares rose in post-market trading after the sneaker retailer did we say sneakers now? Trainer retailer reported first quarter revenue that beat estimates. Joining me now is our equities reporter, Chloe Melly. Chloe, what for you then were the key takeaways from what seems to be a bit of a turnaround story right now?
Yeah, absolutely. Well, that is the key headline, is that the turnaround is paying off. So the CEO, when he came in, Elliot Hill, he decided to kind of really erase some of the missteps, that were made by previous management, which was to kind of cut ties with wholesale partners and to maybe focus a little bit too much on the casual footwear rather than the kind of running and performance categories. So he came in and cleared out the inventory. He decided to invest a lot of those marketing dollars on that sports category, and he also reorganized management at the top. And so some of that seems to be now feeding through and paying off. So the sportswear category did well, the running category in particular, where we've got a rebound there despite competition from a new kind of challenger brands like Hoka or On. And then the wholesale part of the business is also doing much better. So all of that seems to be paying off, but the CEO said that progress is not linear and there's still kind of work to do.
OK, so there's that caution there coming through as well. What have they been saying about the impact of tariffs?
Yeah, so obviously Nike is quite exposed to that because of their manufacturing facilities in Southeast Asia and Vietnam in particular. So they said that they expect a 1.5 billion increase in incremental cost from tariffs. That is up from an estimate of $1 billion previously. It also said that it expects an impact on gross margin, which is, of course, a key measure of profitability. And then in addition to that, there's the pullback in consumer spending that is really kind of weighing on the outlook even more. And because Nike has to push up the prices to sort of mitigate the impact of tariffs, that is also having even more of an impact, that kind of pullback in discretionary spending that we've seen across its markets, really.
What are they saying, and what are you thinking about in terms of the next catalyst then for Nike?
We had a big milestone last week with the launch of Nike Skims, which is this collaboration with Kim Kardashian's Skims label. So that will be kind of a template potentially for more of those high-profile collaborations. The global rollout is in 2026, so it'll really, for Nike, it'll be banking on that to see how it works, see how much it boosts sales. And then, of course, it has to continue rebuilding those partnerships, relationships with wholesale partners that it had kind of abandoned a little bit in the past. So that'll be kind of a key focus going forward.
Chloe Melly from our equity team on Nike, and something of a turnaround, but the caution as well around tariffs and the consumer in the US, and looking ahead to some partnerships with some of those notable celebrities, of course, and what that could do for the company. Chloe, thank you. There's plenty more coming up. We're going to have a look and preview the Eurozone inflation story for you. Stay with us. This is Bloomberg.
The risks to inflation appear quite contained in both directions. And third, with policy rate now at 2%, we are well placed to respond if the risks to inflation were to shift or if new shocks emerge that threaten our target.
ECB President Christine Lagarde there, talking about the need to stay vigilant, of course, on the question of inflation, but saying there are no near-term risks to the outlook. As we look ahead, of course, to the inflation data that will drop across the Eurozone later this morning, which we'll break down for you, of course, they are closing back to that and around that 2% target, of course, and that's allowed them to get the benchmark down to 2%. But we'll see how that story evolves. We had the European economist from Swiss Re on the show earlier suggesting that inflation could, in fact, continue to slow in the Eurozone below the 2% target, maybe to 1.8% for 2026, before turning higher towards the end of the year. Most, of course, expect the ECB is going to be on hold for a prolonged period of time now that they have the benchmark rate down to 2%. There's Swiss Re suggesting that an unpriced risk is potentially a move from the ECB towards the end of next year to hike on higher inflation, again, towards the end of 2026. That's the view from Swiss Re. Let's flip the board and look at how to think about the government shutdown in the US. Mark Cranfield of MLive telling us earlier that really the cleanest play is the euro strength, dollar weakness on this story. It's the FX markets for Mark Cranfield that is front and centre. But when it comes to bonds and equities, history suggests that bonds are more impacted during a scenario like this than stocks. Stocks can regain any losses that come through. It does, of course, come down to how prolonged this shutdown continues. 5 weeks, 2018 to 2019, of course, that was the longest shutdown in history. We do not know how long this shutdown will last, of course. Let's flip the board and have a look what this means for data. We're unlikely to get the non-farm payrolls down. It seems unlikely we'll get that data from the BLS, of course, on Friday because of the shutdown. So arguably more scrutiny then on the private print around ADP later today. The forecast for September expecting a print of 51,000 versus 54,000 in August, as the debate, of course, continues amongst policymakers on the FMC as to the next steps for the Fed. Is October the next move lower for the Federal Reserve? We know the labour market is now central to that, but we have less clarity, it seems, at the end of this week, given it's only ADPs that will come through, most likely. Now, Bloomberg Terminal users can now get access to these charts, of course, and others used throughout the show at GTV. Go on the Bloomberg Terminal. Stay with us. Bloomberg TV, of course, for live coverage of the Women, Money and Power event in London, convening the most influential female voices in finance from around the world to discuss consequential themes facing the future of business. Highlights include Franklin Templeton's Jenny Johnson and GSK's Emma Walmsley. The opening trade, though, is up next. This is Bloomberg.